Hey everyone, welcome to the KE Report Daily Editorial. Again, Thursday, October 30th, chatting with Joel Elconin. Joel is the co-host of the PreMarket Prep Show. You can check out that website linked in the show notes, and also the founder of the Stock Trader Network. As we do with Joel, we're going to look more broadly at these markets, and one chart that's been getting thrown around a fair bit here, Joel, and it keeps getting updated every time the Fed cuts rates at all-time highs, shows going back to 1980 when the Fed has cut rates at all-time highs. The markets continue to move higher. There is some mixed data in the next month to 3 month, even 6 months out. But you look 1 year later from a Fed rate cut from all-time highs, the markets 100% of the time have been higher. And this is something like almost 20 instances. Joel, the Fed just cut rates. Markets were at all-time highs. Do we fight the Fed here and say there's no way these markets keep going higher? Or do we just accept what history has told us going back to 1980 that in 1 year time, the markets are going to be higher?
Well, thanks for having me, guys. Always a pleasure to be here on the KE Report. Sure. I mean, probabilities, that's what the market is based on. And, so far, you can follow those probabilities. I will just say, and I can't go back and look at, where we were in our economic cycle or where we were with geopolitical things when those events take place. But, stats are stats and they speak for themselves.
Well, Joel, speaking of stats, we don't have a lot of stats from the government right now because the government's still closed. So the Fed is also slightly nervous to project out too far into next year because they don't even know what effects this is having as far as jobs, as far as inflation. Some of these metrics are lagging at best, but missing for the most part. What do you think about the fact that we still don't have a lot of government stats?
Well, let's look at things from a couple different perspectives here and in the context of that Fed meeting yesterday. And it was hawkish. I mean, you can't, any other way you slice it, he was hawkish. The thing that set the market into a tizzy very quickly and it's corresponding today was, hey, it's not a foregone conclusion. We're going in December. So if that, and I know the Fed funds tool and the CME is still supporting, 60%, 70% probability. But he definitely, if he took that off the table or said it wasn't a foregone conclusion, then what are the implications for 2026? Now, I'm of the persuasion that the economy's still doing pretty good. We're not necessarily, are we completely done fighting inflation? We don't know because we don't have all, we did get some CPI data last week. But you have all, you have a statement yesterday that was hawkish and from the standpoint of what the market was expecting, and you had a lot of price action anticipating a more dovish Fed, and that's not what you got.
So, Joel, as much as I hate talking politics or even trying to predict politics, fact of the matter is these markets still move a whole lot on trade rhetoric. And it does seem recently, outside of Trump going after Canada because of a commercial he didn't like, he seems to be taking a bit of a softer tone and more positive tone with trade. Whether we believe it or not, and whether anything comes out of it or not, do you think that we are seeing a change for whatever reason out of the White House that it might be a little softer on the trade wars?
Well, I mean, we've discussed the taco trade, right?
Mm-hmm.
Yeah, you did see some evidence of that. Trump was not as, you know, uh, belligerent. I don't know if that's a good word, but he went into the meeting and what it seems, and I think another thing that's hanging over the market here in today's session. I mean, I don't know if you guys watched the overnight action, but it was absolutely crazy. We actually traded above the parameters of the high from yesterday about midnight when that meeting concluded. And then went straight down 50 handles, and we have not been able to recover. So for whatever came out of that meeting, whatever, terms have been, the way the market's looking at is that Trump may not have the upper hand as he thought he did. And that actually China is gaining support and becoming stronger as a result of this, when what he was trying to do was make them weaker. So that's what the market that's certainly what the market told you in the price action overnight, and it is carried into today's session. One other thing is now there was a headline out this morning, didn't get a lot of coverage because we were looking. I mean, the market when the market was weak, and then about 8 o'clock, man, sellers just came in. Sellers came in. We were trying to identify. It was almost like a news catalyst, and the only catalyst that we could find was Bessent, our Treasury Secretary, said, I don't know where he was speaking, that the government shutdown is starting to have a negative impact on our economy. Surprise, surprise. You cut the government spending, you cut government jobs, then you cut out the government altogether. It's costing us billions of dollars a day, and it's going to have a negative impact on our economy. So the government shutdown's just been kind of swept under the table. But the longer that goes on, the longer people aren't getting paid, the less they're spending, at stores and restaurants and everything. So that's one thing. Besides the whole China situation, that government shutdown is not bullish for the market.
Yeah, Joel, two different things to tug on there. As far as the trade softening and the deal with China, with the U.S., we'll still wait to see some of those details. There's been a lot of hype leading up to it about what could be covered there between the two administrations. But there was also a flurry of deals that really roiled the commodity sector. The deal with Australia to focus on critical minerals. Then Trump cut 4 deals with Vietnam, Malaysia, Cambodia, and Thailand to try to source critical minerals and try to find a workaround with China. And some people think that all of those deals with the other Asian nations and Australia upset the apple cart with China, that they could see that the U.S. was trying to go around their backs and go around the corner to strike parallel deals. And so that might have hurt the situation. So I'd love to get your thoughts on that. But also, you brought up the government shutdown. The big issue there is the SNAP. When you go to the grocery store, when you go into things like Walmart and Target, there's a list of about 10 businesses that people are worried about that if the government was to not reopen and those people couldn't go shopping using their SNAP and that government funding, a lot of retail businesses are in the hurt locker. So both those topics, love to get your thoughts.
There's a couple things here, and I think that as a result of this trade war that's going on, and you could take Canada, you're looking elsewhere, right? If this is the kind of state, this is the way our government's going to act towards like our only friends out there, you guys are going to find other places to do business. And I think that that's what you're seeing elsewhere. It's like, okay, all right, we can't rely on the United States for this, then we got to open up. So what was intended to hurt other countries is actually helping them as they're looking to expand their trading partners and their customer base.
So true. That could be kind of the real downfall out of this whole trade war that has been started by the U.S. But again, we'll see where we go. And the U.S. still is the kind of engine the strongest economy out there. So people do still want to trade with the U.S., but not when they're getting bullied around. Back to markets then, Joel, and let's talk earnings season. We've gotten more earnings. We're still not even halfway through earnings season, but so far, your takeaway from what's standing out to you? What's winning? What's losing out there?
Well, the bank stocks started things off and they did well. Also, if you're coming into of the tech trade coming off a little bit, which Nvidia kind of stuck a fork in that yesterday, where's the money going to go? And the money's going to go into value stocks. One of the biggest percentage, I'm looking at my top 10 components in the S&P, which make up like 35% of the index. I see a little green in Apple. Apple, it's like a staple. It's a value stock. They pay a little bit of a dividend. That's up $1.70 ahead of its report. Berkshire Hathaway is trading up almost 1%. That's just been getting beat up. JP Morgan's trading up 2%. Okay. Eli Lilly, which also had earnings. So is there a shift? Is the money coming out of the mega cap tech and going to be looking for another home? Money just doesn't just come out of the market and stay. It goes other places. So is the value trade going to come back? You had the IWM coming up to make all-time highs, but the IWM doesn't. The companies in the IWM, They don't want to hear that interest rates aren't going down. They're very interest rate sensitive. They're companies that don't make a lot of money. They borrow money. And so that was a negative for them. But looking at the earnings, you have Microsoft, boom, getting hit. The Meta, I would say the most concerning thing to me about earnings season is the Meta report. It's traded down over 10%. They took a $16 billion charge because of the big, beautiful bill. Okay. Also, if you go back in memory, who was the first one just pouring money into AI? Hand over fist, billions. We're doing this, billions, billions, billions. And now they're having to take a charge. I know it's a big, beautiful bill. It's not directly related to that. But what I see in the market potentially is this AI spend got way ahead of itself. And there's a lot of companies spending a lot of money on AI. So if this is a trend, or maybe Meta's the one off because they went in head first and they spent all the money. But if this is something that is a precursor to some of these other tech companies that the AI spend has just got way ahead of itself, then there could be a lot of downside in this market.
Well, Joel, just to that point, are some of these companies that are focused on AI and, or at least giving lip service to the fact they are going to have to prove to the market that it makes sense to invest in it, that it makes sense from a profit standpoint to keep pushing the pedal to the metal? Because I think a lot of companies have struggled to show that all of their investments into AI have really panned out in a big way. What do you think about the people pushing back on AI now?
I mean, it's evidence, like I said, Meta might be, a one-off on this. Maybe Apple, which is, has spent money but hasn't got in, is maybe, I mean, what you're seeing today is maybe not, not going to be having much exposure. Frankly, and I'm going to sound like an old fuddy-duddy here, but I just don't see where the return is going to be in all this AI spending. I really don't. And what that could be, a reflection of my age and my mindset. But I thought one of the great things about the world and different countries was like innovation, right? Forward thinkers. Now with AI, all we're doing is concentrating on things in the past. That's not going to lead us to new cures. I mean, it can. I mean, I'm like I say, I'm probably overdoing the point here, but originality, original thinking. I mean, what's this? Look, the kids, like if you're in school right now, you're doing your term paper, your homework. I have a buddy that's a teacher, and what he does with his students is he gives them homework assignments that are personal, that there's no way like to give it, talk about some experience in your life now that you're going to think about in 10 years. Well, AI is not going to be able to, help you with that. So, I mean, I think it's important. I think quantum computing is important. I think, I'm probably overlooking a lot of the perceived benefits of AI. But like I said, just being an old man like I am, I just look at it and I'm like, man, where's the original thinking? Where are people picking up books and reading? Thomas Edison inventing the light bulb. I mean, where are we going to have these innovations coming on if we're only relying on AI?
Yeah, that's a good point, Joel. We don't know how AI is going to play out or even what areas it's going to help with, but the capex that's being spent there, boy, oh boy. I remember it was probably like 10 years ago when the markets were just drifting higher and higher. And one of the arguments was there wasn't a whole lot of spending. There wasn't capex spending for companies that were looking at developing something. And now all that capex is coming into the AI sector and data center build outs. The biggest question is this capital going to be available forever or even for another year or two? Impossible to make that prediction, but with these tech companies just continuing to churn out free cash flow, it does seem like they have the ability to keep spending for at least a little while longer. So how do you balance that out where it's not like these companies are just raising money from the markets? They're just churning out money because of their kind of older business right now.
Well, yeah, and what are they doing to those older businesses? They're cannibalizing it. They're laying people off. They're saving money by laying people off so they can spend it on AI. I mean, if you talk about the long-term effects, I can't, anybody that's going to tell you that AI is not going to take jobs away, then they are just not in touch with reality. I mean, this employment, and we've discussed this before, the unemployment that we have and the gauges that we are going on may not be so, the standard labor market is permanently shifting. So maybe we're just like the measures that we're using out, to measure unemployment, maybe they're false. Maybe there's going to be as a result of AI, there's going to be a lot more structural unemployment. And if you could tell me that the efficiency of AI is going to make up for someone losing their job, then I highly doubt it.
Well, Joel, one other topic to get into. When I was over on your program earlier today on the Stock Trader Network with Brent brought up the topic of how you were noting on your show a lot of the value trade coming back alive today, everything from Berkshire to utilities and to financials. And so people kind of seeking shelter at the same time where the markets are still up near all-time highs. So the tug of war between growth and value, how do you think that develops?
Well, I'll tell you right now. I'll tell you after the Apple report. I mean, Apple, like I said, that's a little bit more in the mixed cap. We still have a lot of companies yet to report. Nvidia. Oh, also you have Amazon after the bell. So there was I mean, you can't. I mean, the tech trade, you can't call it dead, but the market right now is telling you they want to play a little bit of defense. And when the market goes into defensive mode, it's usually a pretty good reason. So, you can look at the charts of these. Apple trading a new all-time high, Google making a new all-time high today, but it's mixed. It's not all the Microsoft trading down today. Amazon's in the red, but they're due to report. So it just may not just be the same tech trade. The winner, there could be some separation in the tech. And for the losers out of that, it very well could be going into the value market.
On that topic of a defensive trade, though, Joel, is it truly a different market? We're hearing so many people out there saying that the old 60-40 portfolio is dead. And as we're talking about a defensive trade, it's not like we're seeing money fly into bonds or even into the US dollar. Yeah, the dollar's up a little bit this month, but it doesn't seem like when we talk about a defensive trade, it's the way it used to be in terms of these other asset classes and money in a way kind of leaving the markets. It's just getting rotated within to different types of stocks.
True. And the dollar is certainly playing a role in that. You haven't had, and I guess this is the best way to put it, is you just haven't had a sell everything market in a long time. And the money has always been moving around, right? And until you get that sell everything moment, then you just cannot stand in the way of this raging bull market, whether it's going to be a geopolitical event, whether the market's becoming more and more numb to the trade talk and to the Trump tweets. You don't know. But, as far as the 60-40, I mean, the bond, it's just not a good application, and cash is certainly no place to hide either with inflation. So you just got to be creative. I agree with you on the 60-40. Know what you own and protect what you have.
There you go. Joel, wrap it up there. That's always good advice in a bull market, bear market, any kind of market. But right now, still very much a bull market in a lot of different areas. That rotation will continue undoubtedly. Just interesting to see that rotation really stick money continuing into and stay into the broad averages. Again, you want to listen to what Joel's talking about on the pre-market show over at the Stock Trader Network. Click those links in the show notes. Joel, great chatting with you. Have a great rest of your week. Happy Halloween tomorrow, and we'll chat next week.
Spooky markets.